This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Sellers of sanctioned oil from Russia and Iran are hiking offer prices to China after Venezuelan crude rallied following the suspension of U.S. sanctions on the South American producer, trade sources said. Washington's 6-month waiver of sanctions on Venezuela has intensified competition for the OPEC producers' heavy oil, lifting prices and reducing supply to top buyer China. That has forced some Chinese independent refiners, known as teapots, to seek the next cheapest oil, which comes from Russia and Iran, with demand expected to rebound in early 2024 when Beijing issues new annual import quotas. European Union countries are close to agreeing a deal on a proposed 12th package of sanctions on Russia focused on a Russia-origin diamond ban and new measures to stem the flow of Russian oil, according to 4 people familiar with the matter. While the biggest part of the new measures is the ban on non-industrial Russian diamonds, EU countries have also been looking to make it harder to circumvent existing sanctions, including the G7 oil price cap. The text includes tougher measures on how to prove Russian oil is traded under the ceiling as compliance has waned in recent months.
Moving on to the top news in the energy sector.
The COP28 climate summit was hurtling towards overtime early on Tuesday, with negotiators awaiting a new draft deal after many countries criticized a previous version as too weak because it emitted a phase-out of fossil fuels. Countries gathered at the Dubai summit are attempting to agree on a global plan of action to limit climate change fast enough to avert more disastrous flooding, fatal heat and irreversible changes to the world's ecosystems. A draft of a final deal, published on Monday by the United Arab Emirates, which holds the presidency of the summit, suggested 8 options countries could take to cut emissions. Oil rose on Tuesday as an attack by the Iran-aligned Houthis on a chemical tanker escalated geopolitical tension in the Middle East, though concerns over excess supply and slowing demand kept a lid on gains. A cruise missile launched from Houthi-controlled Yemen struck a commercial chemical tanker, causing a fire and damage but no casualties in the latest such attack to heighten safety risks for tankers in vital shipping lanes. Brent crude futures for February rose 21 cents, or 0.3%, to $76.24 a barrel by 0915 GMT, while U.S. West Texas Intermediate crude futures for January delivery gained 27 cents, or 0.4%, to $71.59.
Next, we have the top news in metal markets.
Mine closures and disruptions have rapidly changed the landscape for copper supplies and prompted analysts to lower their forecasts for surpluses in a positive signal for prices of the industrial metal. Copper prices on the London Metal Exchange on Friday headed towards the 4-month highs of $8,640 a metric ton seen on December 1st, partly due to Anglo American lowering its production guidance. The London-listed miner said output next year would amount to 730,000 to 790,000 metric tons, down 20% from a previous estimate, while for 2025 it expects to produce 690,000 to 750,000 tons, down 18% from its previous estimate. Iron ore futures rebounded on Tuesday with the Singapore benchmark at the highest level since February, as hopes resurfaced for more stimulus from policymakers in top consumer China to spur its economic recovery. The most traded May iron ore on China's Dalian Commodity Exchange ended daytime trading 1.52% higher at 969 yuan and 50 fen, $135.12 a metric ton, following a fall of 0.37% a day before. The benchmark January iron ore on the Singapore Exchange was up 0.63% at $135.85 a ton, as of 0758 GMT, surrendering some earlier gains after hitting an intraday high at $136.35 a ton, the highest since February.
We will now look at the top news in the agricultural sector.
Bulk grain shippers hauling crops from the U.S. Gulf Coast export hub to Asia are sailing longer routes and paying higher freight costs to avoid vessel congestion and record high transit fees in the drought-hit Panama Canal, traders and analysts said. The shipping snarl through one of the world's main maritime trade routes comes at the peak season for U.S. crop exports, and the higher costs are threatening to dent demand for U.S. corn and soy supplies that have already ceded market share to Brazil in recent years. Ships moving crops have faced wait times of up to 3 weeks to pass through the canal as container vessels and others that sail on more regular schedules are scooping up the few transit slots available. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.